Good evening. This side, Rahul Magan here. One of the most interesting areas in the world of finance is definitely investment banking. And I'm having a deep understanding of how exactly this industry is evolving over the period of the time. And I must thank you to the global financial centers like United States of America, Singapore, and all. And I also thank you to the top banks of the globe because they are devising new financial instruments almost every possible day. And more importantly, the world of investment banking is not what when I started in 2007. In the last 17 to 18 years, world of investment banking has substantially changed, and especially after Corona in 2020. And ladies and gentlemen, the most important thing which is very significantly changing in the world of investment banking is the valuation and regulatory. Like I said many times, that investment banking most important areas is the valuation, basically the valuation of that relevant company, say XYZ, who is planning to issue debt, IPO, FPO, right issues, offer for sale, or any other form of the corporate action. And that valuation should be as per the guidelines which is framed in that relevant country. Of course, there is a caveat in that. Now, in English, the meaning of the caveat is the disclaimer. Now, the caveat is the valuation methodologies provided in that country, say PQR, should not be silent. Unfortunately, few countries are silent on the valuation methodologies, which means the discretion is coming into the picture. Now, the discretion means that the relevant investment banking firm, say in our video, we assume iBank. So, just hypothetically, iBank means that relevant investment banking firm. So, that relevant investment banking firm, iBank, would now have our discretion into the picture. And when this discretion come, then of course the interpretation issues are bound to come. Ladies and gentlemen, in this today video, I would like to discuss a very important concept, and that concept is technically known as basically how you devise your block or bulk deals. Now, there are two kinds how the shares are traded in a relevant country. But, ladies and gentlemen, please note very carefully. I repeat, please note very carefully that when I am shooting this video, I am talking about a concept. So, kindly do not link this with X company or Y company, X country or X Y country. Do not do this, please. I am talking about a concept as a whole. Please take a note of that. Now, ladies and gentlemen, we all understand that in a global financial market, bulk and block deals are not a different concept. In many countries of the globe, in the countries like the global financial center, the bulk as well as the block deals are very, very relevant and they happen on an almost possible day. Now, technically speaking, when a company, now there are two kind of companies we have as far as the capital markets are concerned. Number one, those who are listed in that relevant PQR country, or those who are not listed in that PQR country. Now, if you are listed, you fall under the guidelines of listing obligation and disclosure requirement. Many countries have their different naming conventions. While if you are not a listed company, then you are falling under the requirement of a private company. So the Companies Act of that country, say PQR, determines how a listed company and how an unlisted company works. So that's matter. You know, we really need to understand very important thing that when the company is listed in nature, then the first step the company do is to list, and that is known as initial public offer. Now, initial public offer is definitely a time consuming process. There is no doubt about that. It is expensive also as compared to private placement. Like Indian Companies Act 2013, Section 42, talking about the private placement. So choice is yours. You can go ahead for the private placement. You can go ahead for the IPO. IPO is having some advantage. Private placement having some advantage. Both are having their disadvantages also. Similarly, when the company is unlisted, that doesn't mean that company cannot trade. So here in this video, let's create a very hypothetical example, which I am creating, only for the sake of the video. Let me repeat, only for the sake of the video. So let me quote an example called Snackers Private Limited. Now I repeat that company which I am taking is a completely hypothetical company. God forbid, if that company turns out to be a realistic company, then that's a pure coincidence. Pure coincidence. Now, let's assume that there is a company called Snacker Private Limited. And what this company is doing, this company is into the business of FMCG. Now, this company is making the sweets, the FMCG products, the namkeen, I would say the sweets, dry fruits, and all these kind of things the companies upload. Let's assume that hypothetically the company's sale is 5,000 crores per year. Let's assume, and their net profit, which is in our parlance, is called bottom line, also known as PAT, which is called profit after tax, is 20%. Hypothetically, which means 5,000 crore is the top line. 5,000 crore into 20%, which is near to 1,000 crore, is the bottom line of the company. Now, we assume hypothetically that this company is a private company, which means that let's further assume the company is promoted by 4 people and all 4 are the family members. Say father, mother, and 2 sons. Let's take an example. Now, all 4 hold the equal stake in the company, which means 25% each, which means that the 1,000 crore, out of 1,000 crore, let's assume that the company's board, because that is definitely not the hard and fast rule that if the company is listed, then the company holds the board. No, even unlisted company can have board of directors also. So the board decided to have say 25% of PAT to be declared as a dividend to the existing shareholders. Now let's assume that all 4 own 25%. So they get whatever 1,000 into 25, which is 250 crore dividend to be divided into the 4 people. Because it's a closed company, there is nothing in the hands of public. And we here assuming that the company is not having any form of debt, which means no bank loan, no working capital facility, no facility agreement. There is nothing on the board, which means that since there is no loan, so there is no lien also. Lien means the company pledged their shares. So there no loan, no lien. Point is closed. Now, the biggest question here is assuming that after 5 years down the line, again, hypothetically saying that this company planning to invest in the Middle East. And they're saying they are investing now in Dubai, Qatar, say Saudi, or all respective countries. And for that, you need 2,000 crores worth of expansion. This is the bare minimum you need. I again repeat, this company after 5 years decided to invest in the Middle East, which includes Saudi, Qatar, Dubai, and respective countries. And to have the bare minimum funding is 2,000 crore. Now that 2,000 crore company is taking up as a loan from the bank. Now let's assume hypothetically the bank name is B, right? Bank name is B. Now that bank is ready to give them a loan. Suppose 7% is the rate of interest. So 2000 crore into 7%, which is equals to 140 crore, they're supposed to pay as an annual interest out of their PAT. Let's, without entering into the merits that whether the company is comfortable or not, let's assume that company is comfortable paying 140 crore as an interest. Now, the bank is saying the rate of interest which I'm offering you, which is 7%, is a cheap rate of interest in this hyperinflationary environment when Federal Reserve, ECB, every other central bank is at least, if not hiking, then not cutting also. That is also fair. Now they are saying the since we are offering you 7%, on the contrary, the market is offering at 12%, 13%, which means that 5% spread, which I'm taking, that spread do not come free. Okay. For that, you need to give us the lien of 10% of the outstanding stocks of the company. Now, please take a note that since this is a private company, which means nothing is raised from the public. The authorized capital of the company is completely called out because it's a private company and company never envisaged that they would end up having the expansion in the Middle East. For that, they would be needing around 2000 crores and they need to borrow. Now, here the questions start. Now the company decided to the promoters, which is technically titled as the dilution impact. The promoters four decided to dilute 2.5% each. Let me repeat, 2.5% each. So the total is 10%, and that 2.5% they would be selling in the market. Why? Because that whatever 2000 crore they would be taking, the bank, who would be giving that 2000 crore, he would be taking the ownership of this 10% of the stake. So that 10% they are transferring to a bank. Now, the biggest question for the investment banker is whether he will simple transfer this 10% to the books of bank, which we hypothetically assume as B, or he would do the accelerated book building, which is shortly known as ABB, whereby he will price that relevant company, assuming that company is listed, and what would, based on the financial parameters, the balance sheet, the P&L, so on and so forth, the company might be traded at the relevant indexes of that country. Or what would, if we do a block trade, rather than leaning to a bank, we will take the funding from a private equity or a venture capitalist. Ladies and gentlemen, this is technically known as disposal strategies in equity market. I repeat, disposal strategies in equity market. And this is a very tricky exercise because whether we would be lean 10%, which means four promoters, hypothetically assume 2.5% each to the relevant bank, whatever, say XYZ or B, we titled. Or they, rather than going to a bank, they would be going to a private equity firm, assuming that today they need 2000 crores. What would, after a couple of years, 3 years, 4 years, they need another 2000 crores. And then rather than negotiating this with bank, say B, we negotiate with a private equity or a venture capitalist firm. Because that's a hard truth that private equity and venture capitalist firms are always looking for better and suitable and a good companies. So why they would say no if the company is profitable in nature? Or third, rather than going for a private equity route, rather than going for a banking route, what would the company list in the market via IPO and raise whatever, 2,000, 3,000 crores from the market. Ladies and gentlemen, this disposal strategies is very important. And as an investment banker, people might have difference of opinion, like you go with option A, you go with option B, or you go with option C. It's completely respectable that people might have difference of opinion, but having said that, all opinions have their plus and minuses. And ladies and gentlemen, the biggest skill that comes into is, it's not that we would lean to a bank option A, we will get it from private equity option B, or we will go ahead with the IPO option 3C. The biggest skill comes how we execute the block trade of 10% of that company. And ladies and gentlemen, let's assume, since it's a whole hypothetical example, let's assume that 10% block trade of that company valued 4,000 crores, which means that you are pledging a kind of, you can say, 4,000 crores. So the block trade would be 4,000 crores. Henceforth, the very important thing that comes into the picture, that the block trade can have hundreds of ways. As an investment banker, as a skilled investment banker, you are supposed to decide yourself that in what way you would be executing the block trade. It looks a very fancy and easy thing, but it is not as easy as you are thinking. Because the block trade is a very, very complicated process. And ladies and gentlemen, if you are thinking that the block trade is strictly restricted to the example I put forward before you, then please take a note that the block trade can be used in the industry of private equity, hedge fund, the banking sector, the syndication, the credit lines, and last but not the least, alternate investment funds. Block trade or a bulk trade is one of the finest inventions we have in the world of corporate finance. I need to agree with that. But having said that, one important thing which we need to keep in mind is that the block trade or a bulk trade execution is not a cup of tea for everybody. And there are many countries of the globe, name XYZ, who have a very volatile financial market. Like today it is up, tomorrow down, then next day up, then next day down. The markets are politically motivated and so on and so forth. The government regulations, the rumors, there are many other factors to consider, ladies and gentlemen. This is what I wish to say about this topic, which is titled Investment Banker Market Disposal Strategies. Next time, I would be covering a very tactful concept called cross spread. Now, just to give you a small hint, that the cross spread means that, say that investment banker is zeroed on, say, he'll say we go for IPO. Just take a hypothetical example. Now, investment banker is not a free of cost party. He would be charging something because it's a very complicated exercise, a lot of skillful expert people to employ, interviews, road shows, and whatnot. There is a cost. And there is an incentive fees also nowadays. Incentive fees means that if you accelerate your target, that relevant companies, say XYZ, would incentivize you. So gross spread is one thing, incentive is another thing. Next time we'll deal with that. But ladies and gentlemen, I wish to tell you one thing before I part with you, is that investment banking is not only a very interesting world, but also a very skillful and a tricky world. Because one person would be going this way, another person would be going this way, and both have their permutations and combinations. Time will tell who is correct. Skill is a very necessary and integral part of investment banking, and take a note that you are supposed to reskill yourself. I repeat, reskill yourself on a periodic basis. Thank you very much, ladies and gentlemen. This is Rahul Magan. You have my number 9899242978. Let me repeat 9899242978. Thank you.